people, and that is fantastic, because if you've been at any other session, you already know how I feel about time, right? I believe that CP time, if you ever heard your grandmother say it, CP time, colored people's time, is an absolute myth, right? You heard your mama talk to you about colored people's time, and that is really an excuse for Black people to pull up late. You're supposed to be there at 5 p.m. You come in at 6:30 p.m. Talk about why is the panel over. Well, in my humble opinion, again, CP time is a myth, because Black people can be late, white people can be late, Asian people can be late, Australian people can be late. So being late is not a function of being Black. In my opinion, being late is a function of being broke, because broke people do not understand the value of time. So they spend it indiscriminately, making every other person wealthy but themselves. So thank you so much for pulling up on WP time, on Wealthy People's Time. We are going to be having a conversation about why you, why does investment management matter? Why are we asking you to attend these sessions and learn more about the CFA Society and Black wealth and Black money making? There was a statistic that I read that said that Black wealth was projected to be zero by year 2053. And we believe that there are change makers in this room that will make that statistic an absolute myth by the time that year comes. And so this program is designed to not only give you access to scholarship dollars and internship opportunities, but to also give you access to information so you don't swim in an ocean of knowledge and drown in ignorance. Now, there's a couple of housekeeping items that I want to go through with you. Oh, just a couple of seconds before we get started. If you have any questions whatsoever, we want you to use the Q&A option. Okay, so if you look at the bottom of your screen, you will see an option to click Q&A. Click that and answer your question. Save the chat box for comments, and we'll also be asking poll questions. Okay. If you have scholarship related questions, we want to make sure you can put that in Q&A as well. We will be answering those, or you can also email CIE@uncf.org. And if you are watching me right now, you're on your cell phone and you logged in with 7 digits, we want to see your name. So we want you to make sure to go back in. If you have to log off, log back in, log in with your name. And if you're having trouble doing that, email CIE@uncf.org, and one of my team members will reach out and help you. And speaking of team members, I want to shout out the team members who have helped get the CFA Society sessions ready to go on a consistent basis. And that is Miss Troy Blyther, who you may have heard when you first got in the room, to log back out, log back in. There she is, giving you some fun ways. And then we have Quincy Inman, who's also part of our team, and he's responsible for the really cute graphic that you saw when you came in, and so many other things. And then we also have Edward Sanders, who is going to be with you in the chat alongside myself throughout this evening. So that is the UNCF team that has helped pull this all together. And with that, I'm going to give it over to the phenomenal Michelle Shell,
to be
your host for tonight. Michelle?
Well, hello. Oh, once again. I am actually going to ask that we hear from Peter first before I start, so that Peter can give us a little bit of a sense of the CFA Society. We have been here hosting on behalf of the CFA Institute and CFA Society Boston. But in our last session, we didn't really introduce the CFA Society Boston. So I'm hoping, Peter, that you can do that for us before we jump into today's session.
Thanks, Michelle. I appreciate it. Yes. Hi, everybody. Welcome. Good evening. Welcome to the the UNCF Lighted Pathways presentation tonight. It's great to see everybody at this exceptional event. My name is Peter Sullivan. I'm a CFA Society Boston board member. And right now, I'm actually the fill-in CEO for Jeannie Wolf, who's out on a brief break. CFA Boston, as you know, is hosting this event, as well as the spectacular event that really Michelle presented at 2 weeks ago. For a little background for you, CFA Society Boston is a nonprofit professional society that's really been a point of connection for the Boston investment community since 1946. CFA Boston's vision is to be a representative of a diverse membership that positively impacts society through well-informed financial decisions. Our mission is to promote the highest ethical standards, best practices, and professional development within the investment community. And with that, we have over 6,000 members in Boston, representing over 650 investment firms. And CFA Boston, in fact, is a founding member or a founding society of the CFA Institute. The CFA Institute is a global nonprofit organization, and in fact, the world's largest association of investment professionals. The Institute has more than 170,000 members in nearly 160 local membership societies worldwide. The Institute offers a range of education and career resources, including the Chartered Financial Analyst CFA designation. And we also provide a wealth of resources for students and professors. Examples would be the Investment Foundations program and the CFA Research Challenge. So anyway, I'm going to turn it over to the very capable, proven hands of Michelle Schell, who's moderating tonight's event. Welcome and enjoy it. Over to you, Michelle.
Thank you so much, Peter, and thank you and Kezia both for your leadership here. Thank you all for having me again. I am grateful and humbled to be back with you after our last session. Today we all have an esteemed panel that I will introduce a little bit later. I am going to, as we did last time, start with a little bit of a preamble. So today's presentation is entitled Why You, and Why You in Investment Management is So Important. And my hope for today is that we will talk a little bit about how building and expanding the pipeline for more diversity among the professional ranks in financial services may help us close the wealth gap. So let's begin with just a brief grounding of where we stand. So I mentioned in our last time together that African Americans are and have been asset managers for generations in this country, whether that came through owning banks, developing real estate, starting or buying many types of businesses. Recall that we talked about capital users, who are the entrepreneurs, business people who need capital in order to start and grow their businesses. We've got capital providers who are giving them that capital. And we have intermediaries that are flowing, helping the money to flow between them. So the measure of the buy side is a term that we called assets under management. Although 40% of the US population is made up of people of color, when we think about this measure of the buy side, this measure of standing, as it were, of pools of capital and how companies are managing pools of capital, we would believe that African Americans and people of color in particular have not been asset managers. In fact, 1.5% of the assets under management in the industry is managed by firms owned or controlled by people of color. So we have 40% of people of color, 40% of the population of people of color, but only 1.5% of assets under management in the industry being managed by people of color. So we have this very large gap. Maybe you might also call it a bit of a chasm. Now, when we think about the capital providers, I mentioned households are providing capital to capital users in the industry. We also see this wealth gap. When we look at Black households, the net worth of, sorry, getting some feedback here.
Please make sure you're muting your line.
Can everyone mute?
Is that okay? Thank you. Recall that. Okay, where was I? Okay, so households. So we talked about households being providers of capital for the industry, and we can see that wealth gap persists. So Black households have a net worth. Now, what is net worth? Net worth is when you take all the assets that you own and you subtract out all of the debt that you owe against those assets. When we look at net worth for Black households, you can see that the value is $24,000. That's kind of the amount of money that you might be able to use to invest. Black households are at 24,000. Latin X households are at 36,000. And when we look at white households, their net worth, the difference between the value of the assets owned versus the amount of debt owed, it's 188,000. That's a huge difference. Now, for most Americans, their home is the most significant contributor towards their net worth. When we look at home ownership in this country, and here we're going to look at it by race and by age. When we look at those under 35, we can see white households about 45% of homeowners are white, or 45% of white people under age 35 are homeowners, whereas less than 20% of Black people under 35 are homeowners. Now, when we look at that as we get older, as age progresses, we can see that 50% of Black people between 35 and 54 are homeowners, and the number for white families grows to over 70%. And then over 55, we can see that people of color are still lagging in terms of home ownership in this country. Again, that's a major source of wealth in terms of the net worth that we talked about. And another major source of wealth is stock market participation, as we talked about in our last session. Now, when we look at this recent survey that was done and asked Black households whether they were participating in the stock market or not, we see 41% are, 59% are not. Latin households, 28% are versus 72%. And for white households, 65% are participating in the stock market versus 35% are not. Now, all that said, there is some evidence of change. Among those under 40, we're seeing equal rates of investing between Blacks and whites, with double the rate of Blacks being new to investing versus white. We're also seeing the rate of non-retirement investments among Black Americans rise in recent years. That's significant because people typically start investing in retirement accounts in order to take advantage of the favorable tax treatment that are associated with those accounts. So the assumption here is that if they're investing in non-retirement accounts, then they likely will have taken advantage of their opportunity for retirement investing. Finally, Black people in the survey report that although very few of them recall discussing the stock market when they were growing up, equal shares of them are doing so now. Perhaps that's because of programs like this one. So to the point of this program and where it fits, McKinsey Consulting is a large consulting firm, recently published an article about the opportunity for greater financial equity in financial services. Now, when we look at this chart, I'm going to pause here on this chart for just 1 second. What we're seeing here is the proportion of professionals by role, by level within the financial services industry. So when we go from left to right, we've got here entry-level positions, up to C-suite positions when we go from left to right within each of these charts. So what we can see is that at the entry level, 61% of entry level professionals in financial services would categorize themselves as white. That means 39% are non-white at the entry level. But when we get up to the C-suite, we see 90% are white and only 10% are not. So when we then look at this same chart and look at the pipeline, so again, looking at people who identify as Black or Hispanic at various levels within the financial services industry, what we're seeing is that although almost 40% enter the industry, at the C-suite, we have less than 10%. And when we look at the rates for Blacks, we have 10% at the entry level, well below our representation in the population, and up to 3% or down to 3%, as it were, when we get to the C-suite. So whether it means becoming a more informed provider of capital, raising the level of awareness of those in your families or communities, or becoming an industry participant, which is what we would hope you to do, you have an opportunity to influence change in this area. As a person, as an industry participant, perhaps influencing decision-making and practice while blazing a trail for others. And this program offers a wealth of opportunity for you to help us create change. Now, to discuss their journeys, your opportunities, and our collective vision for closing these gaps, we have these three distinguished panelists today. So let me introduce. We have Jason Goins, who is a research analyst, an equity research analyst on the global impact team at Wellington Management Company. There, Jason conducts fundamental analysis on companies in education, real estate, water utility, and financial technology. He's spent more than a decade working on Wellington's emerging companies team before being on the global impact team. Previously, he was an equity analyst and portfolio manager at Franklin Templeton Investments, where he covered precious materials, waste, and alternative energy companies. Next, we have Tim Codrington, who's a managing director of research in the equity division at Fidelity Investments. In this role, he oversees research analysts and portfolio managers for the consumer team. In addition, he shares responsibility for managing equity research associates. He oversees or manages the undergraduate and MBA campus recruiting and training programs, co-manages a number of Fidelity funds, and he's been in the industry for over 25 years. And we have Valerie Mosley. Valerie is founder of Upward Wealth, a fintech platform that democratizes the creation of personal and financial wealth. She's on the board of New Profit, which is a social venture capital firm. She also serves on the corporate boards of Envestnet, DraftKings, Groupon, and Eaton Vance's family of mutual funds. Before all of this, Valerie, you might think she's not retired, but she is actually retired. Valerie retired as a partner, senior vice president, portfolio manager, and investment strategist from Wellington Management Company. And during her 20-year career there, managed billions of dollars for clients and chaired the firm's industry strategy group. Welcome to all of you. If I can start, I'm going to just leave this slide up for everyone so that you remember who we have on the. But Jason, let's start with you. Jason, would you just start with, did your parents talk with you about the stock market and investing when you were growing up?
No, absolutely not, Michelle. Very much like I've been keeping up with the chat as you've been going through the introduction, and
Great.
I think my experience was very much like so many others. It was not a conversation that happened around our dining room table, mostly because it just didn't feel like it was relevant. There wasn't enough money to have that conversation. But one day, but I guess I'll say, how did I get into this?
Yes.
So I was a paper boy, and when I was 11 years old, I came home and I said, hey. I live with my mom and my grandma, and I said, hey, do we have enough money to invest? And at the time, and you can even still do this, right? Like you could start with like $250. So it didn't have to be huge. It didn't have to be like, all the money in the world. You could start with $250 and $50 a month. And so that's how I got started. 11 years old, I found a mutual fund. I put $500 in, which was, I'm not exactly sure where I think that was like birthday money for the first decade of life or something like that. And then $50 a month. And what you get from that is exposure, and you get the power of compounding. So from the time you're 11, you just get to put a little bit of money in every month. And over time, what starts out small grows to be a lot.
Jason, I have to just marvel at this fact for one quick second. So you were a paper boy.
Yep.
And from being a paper boy, you thought to yourself, I need to open a brokerage account. Like how
yeah, well,
connect that for me.
Okay, so I was a little bit of a precocious kid, and I really liked to get mail. And so in my elementary school, there was a magazine, and you could dial all these 800 numbers, and they'd send you information. And so they sent all this information, and I was like, mutual funds, they will send you information for free because they want your money. And so I got information about all these mutual funds, and that's how I found one. I found the one that was willing to take, my small amount of money to begin investing. And that was how I got exposure. But, Paperboy is not a bad place to start. If people have heard of Warren Buffett, he started out as a paperboy for the Washington Post. I delivered the Washington Post. And through my career, I've actually been able to meet him, which is great. So it all kind of comes full circle.
That is awesome. That's fantastic. I also had a paper route. I guess I was a paper girl. But then for me, I when I was in junior high, I had a job at the public school, at the town's public library, and so I would sit in the stacks, kind of reading the books, and that was kind of how I got exposed to. I wasn't so forward as to open my own brokerage account though, but I wish I did. So, Tim, how did you get started in the industry?
Yeah, it's a long story. But I guess before I jump in, I just want to say thank you for inviting me to be part of this panel. I cannot tell you what a pleasure it is to be on it with such distinguished fellow professionals and friends. So thank you for that. Let's see, how did I get into this business? I think I always wanted to be an entrepreneur. I always wanted to start my own business. And I grew up in the city. I'm originally from Barbados. I'm an immigrant. I immigrated to the US when I was 8 years old. Grew up in the city of Boston as a poor kid. I would have done a bike route, but we couldn't afford a bike. And probably would have gotten stolen in some of the places that I grew up. But so basically, when I was in college, I decided to start my own business. So as a sophomore, I started an ice cream business called Hope Ice Cream. And we convinced Steve Harrell from Steve's Ice Cream to give us all the product at cost. And we got cups, and we convinced Madison Park High School to let us use their kitchen so we could actually re-scoop the ice cream and package it ourselves. And we sold it, at some of the local fairs. And at the end of that summer, we had given the profits back to the employees. But at the end of the summer, I had to make a decision. Was I going to continue in the business, or was I going to go back to college? And it was then that I realized that I knew so little about business and just how businesses work. So I said, I want to learn more about business. I applied to this program called SEO And SEO is this great organization that took young kids like myself and placed them into jobs for the summer with Wall Street firms. And so a kid from Boston ended up spending the summer in New York City working for this investment bank called Smith Barney. And I did a rotation around Smith Barney, and I ended up in this one rotation working with people who invested in the stock market. And so that was my introduction to stocks. For me, it was a way to learn about businesses and maybe get over some of my guilt for having to close my ice cream business.
That's a great start. So you came to, so in our last session, we talked about, or I shared with the students, the difference between capital users and capital providers. So you started off as a capital user, an entrepreneur, right? Needing to raise money as you're starting managing your business. And then, well, presumably, I mean, you paid out all your profits, but you could have been a capital provider with your profits.
I certainly was hoping that I could convince somebody to invest in my business. So
Yes.
And become larger.
Yeah.
But you know, I didn't understand the importance of things like working capital, needing to have funds to keep your business going.
Yeah.
I didn't understand giving away equity in your business or leveraging up with debt so that you can grow the business, so that you can be sustainable.
Yes.
And I really, sorry, go ahead.
That's okay. And you found your way to being an intermediary, and learning about how to make those matches, right? How the capital flows. How do you create opportunities, right? To match capital users and capital providers, and what does it mean to be a good investment, and what does it mean to be a good investor?
Exactly.
And I'm going to transition on that point to Ms. Mosley, who has spent some time kind of in all of these spaces, and pre and post retirement, mind you. We'll call that a retirement. But Valerie, I wonder if you could just give our students a little bit about your background and your story and how you came to find your way to this industry.
First of all, thank you so much for having me here. Michelle, you were amazing, and I'm sure students know that we're in the presence of greatness in Michelle and in Jason Goins. We haven't talked a lot about his background. He's incredible. Michelle is incredible, and Tim Codrington. So I am really honored to be in your presence.
Oh,
a little bit about me. I'm the youngest of four, born in Tuskegee, Alabama. My father was in the service, and my mother was a stay-at-home mom. He was not a Tuskegee Airman, but he taught there. And I'm giving you context because we left when I was 2.5 to go to Germany. And we lived there for a few years before we came back to Philadelphia. And he's old school. He just passed away earlier this year, and believed that you had to work really hard. He gets a job at the Franklin Mint, and he attended school but didn't finish. My mother attended high school and didn't finish. My father attended college and didn't finish. He goes to Franklin Mint and he's given stock options. And those stock options went up in value over time. So I went from an inner city, Philadelphia, gang-infested environment where my brother was drafted, 10 years my senior, to when I was 12, moving to a different part of town where there's grass around the house instead of cement. And I know if you're from New York, it's not a big thing, but there was a big thing because suddenly I was exposed to things. So I'm really big on exposure, and I'm really glad you students, you're here. You're getting exposed to so much. So I thought when I was growing up, you had two options. If you wanted to be successful, you had to be a doctor or a lawyer. And my sister, 9 years my senior, we had a 3-bedroom apartment, and my sister and I shared a room, and my 2 brothers shared a room, and then my mom and dad. And I woke up, went to her dissecting a cat
Oh.
when I was 9, and it was traumatic. So I was like, skirch, I will not be a doctor. And then when I was young, my first aspiration was to be a mommy. When they said, what do you want to be? I want to be a mommy. And so I went and spent most of my time trying to be a lawyer and being intentional about I wanted to be a mommy and I wanted to be a good mommy. Then I started working with lawyers and realized that that skill set did not match my own. And I looked when I went to Duke, and then I went on to graduate school. Everything I did was focused on how can I be this great lawyer? But then I spent time in the industry and realized it wasn't the right thing. Actually, I understood what they did. So I love that you're having students, you're having these conversations now. What do we do every day? And so when I looked at what would I do, I wanted to do something that was lucrative, that was fun, and where I could still be a great mom, because the markets close at 5. And I could be there, and that great mom meant we could have dinner together. So I'm the mother of 3 children, 3.5 years apart, Taylor, Ryan, and Amanda. And when after they go to sleep, I could read and I could learn. And it's an incredible career, guys. I want to emphasize this. There aren't too many fields where, and what I was drawn to this because when I'm coming through, I mean, racism was definitely big, institutional racism. I know it still is, but even then it was more. I wanted something that was really clear. Go to the tape. How did I do? So if that's sales or performance, what is my performance? And I gained enough information to know that if you're a good investor, you get certain passes. Like it doesn't matter. It doesn't matter what you do, what you wear, sometimes even how you behave. Like people just appreciate that you're a good investor. So I wanted an objective a view of my talent. And I would say that every one of you in the audience is uniquely qualified. If you grew up at all having to pay attention to a budget, right? You had to know whether or not it's worth the extra money on Charmin versus the store brand. And that's what's so beautiful about being an analyst or portfolio manager. It's like, wait, we're used to seeing someone and getting a sense, like, are they legit? Are they not? Right? Or comparative shopping. That's what investing is, and it's fun. And every day you don't know what you're going to get. So I absolutely love it. And that's a little bit about my journey. And along the way, I want to say this, I had to learn to not pay attention to what other people thought, other than to make it a data point. So you get trained to taking in information and assessing and coming up with your own view. And so I encourage you to do the same thing, so that when someone is knocking you, when someone is doubting you, and someone is saying, I don't think so, which happens over and over and over again, you have to be like the analyst that Jason was, that says, I know what they think, but I think differently. I am above consensus. We are above consensus. You're aware of what somebody else thinks, but you are not defined by it. So guys, go after investing. It's one of the best industries around, I have to tell you.
Well, that was just an amazing pitch. I mean, like, honestly, kind of sums it up. No, we are not above consensus.
Yes,
So
we are above consensus.
are
And,
above
and you
consensus.
have to
Sorry,
know
we
that.
are
because
above
of-
consensus.
Yeah, because how many times has someone said to you, or I've gone into a meeting and they thought that I was, there to deliver some food instead of being the portfolio manager.
Oh,
Like they're constant little things that come your way, but you've got to know. And when you do your research and you remind yourself of your worth, you're good to go.
It's fantastic. So Jason, can I just on that point, can I ask you to talk about being an analyst and having conviction, and when you are kind of, I guess, pitching or talking to portfolio managers about your ideas, how you go about that?
Sure. So I'll take one step back because I think Val did such a good job of contextualizing the analyst's
fantastic.
job.
Yeah.
I can't do better than that. But let me tell you what I love about it first. What I would say first is that when you work on the buy side, like we do, the power is that clients are entrusting you with their money. So we are investing on behalf of people like you guys, like your parents. And what we're trying to do is earn a return ahead of the benchmark with that capital, right? So that we can have that money compound and go back to you and your benefactors, and you can do something, you can grow that wealth over time, right? What I love about the job is that I'm given the privilege of interacting with CEOs and CFOs and managers. And it's basically like solving a riddle every day, because you get to go in and you say, do I believe what the person from the table from me is telling me? Do I believe in this strategy? And do I trust that they're going to be responsible with this investment of other people's money, in a way that's going to help them fulfill their strategy, and in so doing, capture returns for our clients? And so I think Val said it right. It's about taking in information. It's about accumulating and assimilating lots of information, putting it into what we call a mosaic. So you put together a view of the world that is shaped by all of these inputs, assessing that information, making up your own view of the situation and the potential of that business on a go forward basis, pitching it to portfolio managers, which is a little bit like being a salesperson. You have to say, I've looked at company X and I believe X, Y, and Z about it. I am, as Val said, above or below consensus in my expectations for this company. And then you have to stand in the strength of your convictions and continue to accumulate new data that will confirm or disconfirm what you have previously believed. And so, so that's the job. What I like about it, as Val said, is the competitiveness. At the end of every day, I know how well I did. I know how well I did compared to my industry. I know how well I did compared to my peers. I know the opportunities that I have to get better. I know the mistakes that I've made. And every day is a new opportunity where new information, the opening bell rings again and the race starts again. And so it's a job that appeals to my competitive instincts, but also I fundamentally love the idea that I, from the time I was 21, 22 years old, was able to interact with at a high level with, CEOs and CFOs of companies, which was access that I would never have had, kind of coming from where I came from. And that's the expectation of people in my job.
Absolutely. Tim, I'm going to give you just a second on that. How would you think, or can you talk a little bit about how you prepare new analysts? So those of us coming in to this industry who haven't had a ton of exposure or weren't able to participate in programs like SEL, although not these students are being prepared now, but how do you think about training new analysts?
Yeah, a lot of it has to do with your creativity. When I started out in the business, there was almost like an advantage that you could have just by getting the information. I spent a lot of time working, looking at international stocks, and they weren't covered as well as domestic stocks were. So sometimes you could just get an advantage because you were the first or the second person to have looked at the stock, and management hadn't spoken to a lot of people previously, and so there was an informational advantage. Today, there's this thing called the internet, which has completely ruined the informational advantage, because as soon as information comes out, it's pretty much known around the world. And so now, to be a successful analyst, you have to be really creative. You have to think about, how am I going to take that information and use it in ways which potentially my competitors don't understand or aren't using? What sort of advantage can I gain by thinking a little differently? So what I look for, and what I know is out there amongst the folks that we're talking to today, are people who are creative, people who can say, you know what, this is what the company looks like today, but over the next 10 years, I think it's going to look completely different, because I think there's going to be, a different way of interacting with consumers. I won't say how old I am, but a lot of the apps and technology that just comes as second nature to a lot of you guys out there is sort of new to your typical investor. And so if you can bring that to bear to understand stocks and companies going forward, that's also hugely important. Two other quick things I'll mention. The first is just be passionate passionate about your work and about trying to learn more. As Jason said, a large part of this job is trying to convince others of your ideas. And when it's obvious that you have a passion for your job, a strong belief in and conviction in the investment ideas that you're trying to get others to believe in, it's almost like addictive. We have to listen to you. We want to believe you. So bring that passion. And then the last thing I'll say is the job also takes a lot of humility. You're measured every day. Some days you feel like a hero because you beat that thing called the stock market. Other days, not so much. And so you have to be able to be humble to understand what you don't understand, and not take offense, but to think of it as a learning opportunity. There's absolutely nothing wrong with saying, I don't know, as long as you turn around and go figure it out. So.
Mm-hmm. And how, and then maybe this is a question for all of you, how do you deal with the stresses of that on a day-to-day basis?
I guess I'll give a quick one.
Sure.
Prayer certainly. And you know what? A really supportive family. I've been married for 22 years, and I don't know how she's put up with me, given the volatility in the stock market and how I bring that, unfortunately, sometimes how I bring my job home. But all of that certainly helps. I don't know, Val, what do you think?
I would say that disappointment is really a big function of expectations. That's what I found. And so if you know coming into this industry that you're going to have highs and lows, then you're prepared, at least intellectually, for those lows and highs. It comes with the territory. When it happens, it's a different story. It's hard. And you just have to know, this is what helped me. When you have those drawdowns, they're referred to as drawdowns, the market crashes, they're disappointments. It is so painful in the moment, but your biggest return comes on the other side of those drawdowns. So you have to stay in the midst of it. And that's when you want to look for the opportunity. And I think that applies to life as well as investing. It's like when you've had those disappointing moments, whatever they are, they're drawdowns, they're painful, but there are opportunities there. And if you can be steady, sort of like being in the center of that storm, if you can be steady and analytical and say, okay, the market is traded off, where are the nuggets? Yes, this is painful, but what can I buy? Then that's when the returns are the greatest. So that's what helps me, because I know on the other side, it's like, I'll say this for anyone who's in the audience that has anxiety. Somebody described anxiety as like going up on a roller coaster ride, and it's scary, 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 scary. And that's what happens on the other side when it's painful, painful, painful. And then on the other side, it's like, whoo, when the market rallies or the roller coaster turns over, it can be fun. So just know that volatility comes, but what you want is the trajectory to go upward sloping, like most investments do. And you have to just be mindful of whether or not you're with Amazon, that's going to be volatile but upward sloping, or Lehman Brothers.
Oh dear. Oh, Lehman Brothers.
I would just add to that. I think Tim and Val said it well. I would say you have to come back to the idea of, the market will teach you to be humble, because there are always corrections. One, recognize there are always opportunities whenever things pull back, and it's the job of the analyst, it's the job of the portfolio manager to be trying to find those opportunities. So in hindsight, you can look back at at the COVID crash and realize that there were opportunities being created as the market was falling apart. And if you could keep perspective in that environment, if you could keep your head when others were losing it about them, then you were able to find opportunities there. And then I can tell you personally that, in periods when there was a period when all of my stocks felt like they were going down. And if you can find, friends and mentors and advocates who are there to sort of pull you up, and they said, yeah, we know you had a tough year. We want to see what you do next. Like, that was the feedback at the end of that year. It was, you know, we know what the performance was. We want to see what you're going to do next. I would suggest that that's the type of place that you want to work. This is the type of industry, if that's the kind of environment that you seek. But also, I think it's important to heed that advice. You know, everybody goes through tough periods. The question is, what do you do and how do you bounce back from it? How do you respond to it?
That's awesome. Thank you. Yeah, that resilience, you know, being able to kind of pick up after you've been disappointed.
Yeah, I just leave with this thought, this too shall pass. So when I've hit those really tough moments, they're tough. You just have to know that they'll pass. And if you sell, you lock in the loss. So what I tell my children and everyone, like when those things happen, like this stress that comes up, it's like the market's on sale. We're having a sale.
That's right. The market's on sale. And it's funny, I was going to ask about kind of how you've taught your children, or what have you done to prepare your children as they're thinking about, not to enter the industry necessarily, but about being savvy and informed kind of participants in the capital markets, or being aware of the capital markets, being, you know, not afraid of it.
Right. I talk to them about what I think are the two most important nuggets that I learned, and I drill it home to them, and they would laugh and say, she tells everyone that comes over here the same thing, which is true, which is the power of compounding interest. Like, take it out, let's look at it, let's play it. It's a power. There are three factors. If you know three, you can figure out the other: time, amount, the rate. And it's like, what do you do every day? Let's compound interest, let's compound compassion, let's compound hard work. Like, what are you compounding today? So they hear that, they've heard that a lot. And it's funny, my daughter is in acting, and she's like, Mom, you won't believe, we were out Friday night at dinner. You know what I started telling people? Compounding interest. Compounding interest. So some of it is going, it's just so important. I just think, you know, Einstein said it's the eighth wonder of the world. I think that compounding is the eighth, and compassion might be the ninth. And together we can have a really big difference. So that's what I talk to them about that. The other thing is budgeting. So you got to set, no one teaches you this in school. So if you don't understand it in school, you aren't going to, and you don't get support after school, because wealth managers focus on people who already have assets. Yeah. So you miss out. So I talk to them about the importance of budgeting and investing and giving. So you have to save a little, you have to invest a little, you have to give a little.
Yeah, one of the, as I was reflecting, you know, you all have children of in different stages. So it'd be great to hear from all three of you about where you know, what you're talking to your children about at this stage, at their various stages of life. And Valerie, it's wonderful to know that even as they're grown, that some of those nuggets, and not working in the industry, but some of those nuggets stay with them. I am hopeful that my children will talk about compounding just at dinner with their friends.
That's funny. I didn't expect it either. You never know. Just teach and you'll see what comes back.
You'll see what comes back. Tim, how about your kids?
So my eldest is close in age to your boys, Michelle, and I should say it helps when you have friends who have kids who have been successful that you can point your kids to and be like, come on. So when they were, you know, probably pre-teens, I took them into a brokerage office and I said, pick 3 stocks and let's put some money behind them, and you guys can monitor them. And it became a little bit of a competition. I haven't met, like, you know, once a year I'll come out with the statements and I'll tell them how they're doing, but I try not to talk about it a lot, because to Val's point, it's all about holding something for the long term and watching it compound over time. But that's how they've learned about the stock market. You know, I'll be reading an interesting piece in the newspaper and I'll go to them and I'll say, hey, look at this. you know, what do you think of this idea? My son's a big video game guy, and so we're always talking about whether I should own Electronic Arts or Activision or one of the other names. So I'd say
Yeah.
for them, investing in things that they know about and that they use every day, that's a good way to teach them around the stock market.
To kind of get them started, like connect it to the things that they are familiar with, and talk about the companies, and have them kind of follow in the newspapers. And Jason, with your little ones, relatively
Yes.
speaking.
Yeah, my kids are 7 and 10, and so it's interesting. So basically, we're still sort of in game mode, right? You know, which is great because I'll say, hey, if you do this, I'll give you $1. But if you don't, you know, we can go to Target and you can spend $10. But if you only spend $7, I'll give you $5 if you put it in your bank account, right? So I'm paying incredible interest rates. Like compounding is going berserk in my house to make it interesting for them. But all of them have ATM cards, and they're very eager whenever they get money to like actually go to the ATM and put money in, and they don't know their PIN, so they can't take money out, which works. And I will lie to them for a long time until they get it. So that's my approach. But seriously, I come back to, it's all about exposure, right? And so as an analyst, you know, the companies that I look at, it's really changed my worldview. It's changed the way in which I sort of go about and interact. And so at the start, and some students were on in the beginning, I'm here in DC, which is where I grew up. And so I wasn't going to share the story, but I was able to take my kids by where I grew up today. And I just said, you know, with no loaded anything in it, I just said, what do you observe about this neighborhood? What do you know, so that's the house that I grew up in. And that's that was my bedroom, that room right there with the one window. That was where Daddy grew up. What do you observe about this neighborhood? What do you see here? What is available to you in this neighborhood? Where would we go eat right here as opposed to where we live? Because part of becoming an investor is about observing what is around you. You know, what is the opportunity for this place? You know, is there a market that's being underserved here? And is there a way to invest here, right? And so I want them to be observant people. I want them to be observant creatures of society, because I think that will help them understand, you know, both what this world is made of, right, but also how they can invest and be helpful in this world, right? And so as I think about how to you know, sort of, you know, teach and inspire and get through the day here while we're on vacation in DC, and it is hot, y'all. We're also taking the advantage of, you know, we're learning some lessons, you know, as we sort of drive through the old neighborhood.
Thank you for that perspective. We have just 5 minutes left, but I want to kind of come back to, I mean, we've talked a lot about, and many of your comments have really talked about ways that we can personally address wealth gaps, that we can help our students be prepared as they're thinking about entering this industry and work, and what it's giving them a little bit of an insight in terms of what it's like to work in this industry. I wonder if we could do two kind of like lightning round kind of questions. One being, if there was one thing that you wish you knew before you started, what would that be? What's the one thing that they need to know going into this industry that you wish you knew before you entered? And then the second thing is a book recommendation. Do you have book recommendations that you would give the students to help them prepare for the industry, being investors personally themselves, or yeah, I'll leave it at that.
I'll jump out.
All righty.
There's a book that I read recently that said it didn't start with you. So this isn't a book that you would naturally think of, because it refers to psychology and epigenetics, which means that there are things that happen at a cellular level to you from your mother, your father, your grandmother, and your grandfather. And the reason I think this is so incredibly important is that when you go on this journey and you go on these different career paths, there will be things that, again, that people will say or things that will happen to you, and there are doubts that come up. And there are feelings that come up that can get in the way of you excelling at your career. And it's really important that you know your worth and you know your worthiness. And it's not a function, and you are not what has happened to you or your parents or your grandparents. I think that is really very, very important, because when you know your worth, you can grow your wealth. That's one. And when you know your worth, you will say no to things that aren't appropriate. When you know that worth, you will go after the things that you know you're deserving of. And you're willing to have difficult conversations, which is important. And so to be really successful at many things that you do, particularly in this industry, it is just helpful reaffirming yourself of what is possible when you put in the effort and you put in the work and you know that worthiness. I'm sorry, I'm emphasizing it and we don't have very long. The other thing I would say is that invest and invest often and invest in multiple things. I saw that many people are doing the crypto investing, which I think is great in many ways. Know that what goes up quickly can come down quickly, just know that. So allocate into several assets and do it without apology and do it regularly. That's what I wish I had known. I remember someone saying, one of the founders of Wellington suggested, just make sure you invest. And even Duncan, the president, said, put your money away and don't think about it. Like, invest as much as you can. So instead of putting on something that has the name brand that's really expensive when your account is a little broke, or it's not particularly full, think about those companies and those organizations or those funds, pay attention to fees, and invest in those instead of investing in the look. Yeah, so I'll stop and listen to. And I also say what Jason and Tim said, like, pay attention to what they said. They dreamed, they dreamt, let me say that word wrong. Your dreams were big. Yeah. Like, you're a paper boy, and then you started saying, I want to be an investor. Like, dream big. Dream big. Tim, you did the same thing. And I'm really impressed with that. And so I would encourage the audience and the students to do the same thing. The sky is truly the limit to what you can have. And don't let anybody steal or dim your light.
Yes, get started early, and stick with it often. Thank you, Val. I know we're if I can indulge, if I can ask the students for 3 minutes of indulgence, so that we can hear from Tim and Jason on your book recommendation.
I'll go lightning fast.
Okay, yes, please.
I want to hear Jason's. My book recommendation, I guess I'm talking my own book here, but One Up on Wall Street by Peter Lynch. I actually think he was a pretty phenomenal investor. And then in terms of the piece of advice that I would give, I'd say, don't be afraid to ask for help. For some reason, we tend to have this thing called sort of pride and ego, and all of that stuff, at least in my experience, got in my way when I was a younger person. And I was often embarrassed and I didn't know the answer. So it was easier just to stay quiet instead of actually coming out with the knowledge. Don't do that. Ask for help. Learn how to actually, learn. Just learn. Learning is so important. So I'll leave it there. Thanks.
Thank you, Tim. And Jason, take it away.
Yeah, so first I want to second what Tim said about, there's never a time like this one. Nobody expects you to have these answers at this age and stage. And so this is a great time to come in and say, what you don't know. And this is a great time to be a sponge and soak up that knowledge, because people want to help you. Everybody on the screen wants to help you. Everybody in this program wants to help you. That is behind all of our efforts. And so I can't emphasize that enough. Tim stole one of my books. One Up on Wall Street was one of my books. The other one is Atomic Habits by James Clear, which is not an investing book, but is a fantastic read about how to sort of discipline yourself for greatness in all aspects. And then in addition to what Tim said about not being afraid of asking for help, which I second, I would say, don't be afraid to take risks on yourself. And Val and Tim are both really good friends of mine, in addition to being professional colleagues. And I think that, and they've known me for a lot of years, and I think that they would all say that, if you were unafraid, if you were more confident early on that you would land on your feet, what would you do then? So don't be afraid early on to take more risk on yourself.
I totally agree with
I
that.
wish that to all of you.
Yeah, scared money won't make money.
Scared
It's
money
risk
don't make
and
money.
return. So you have to do that. And ask for feedback, because somebody is thinking about, has views, and they won't tell you. Close the door and say, please tell me what I can do better. And when they do, listen to it.
Oh my gosh, you guys have just dropped many pearls of wisdom in this session. I want to thank all of you. I took notes because you all are going to help me become a better professor. I took notes today. I hope all of you took notes today and learned a bit from our panelists. Yes, Valerie.
I know we're wrapping up, but there's some Q&As. They say, is it too
Yes.
late to start investing? Absolutely not. And with Fidelity, you can have a S&P 500 index fund. You can do it. It's free. You can start with $10. It doesn't matter what it is, but start today. Open an S&P 500. It's the largest 500 companies, and there are no fees, no minimums, no fees. So I just wanted to say that because someone wants to get started. That's how they can do it.
Exactly. Start as soon as possible. Start early. It doesn't, these days you can get started with very little. And to the point that has been emphasized multiple times in our conversation, if you put it in and leave it there and let it compound, you'd be surprised at how quickly you've amassed a good amount. So thank you again for your time and for your wisdom and for sharing with our students. I will say good night. Casey, are you going to close?
Yes, and I believe I'm on. Thank you so much to our wonderful panelists. You all did so amazing. I have thrown both of my shoes. I have picked up all the gems along with our students. You all are incredibly inspiring, and we thank you so much for being trailblazers. I always say that my favorite quote is, do not go where the path may lead, but go instead where there is no path and blaze trails. And you all have been those trailblazers for us. And so until next time, thank you, speakers and students. Of course, you will see us all in your inbox. Someone asked, will the recording be available? Yes, we will send you the YouTube link. And until next Wednesday, have a wonderful evening. Bye-bye, everybody.
Hi, thank you, panel.
Bye.
You're
Thank you.
awesome.
Thank you. Thank you.
You guys were great.
Thank you,
Thank
Michelle.
you.
Thanks for doing that. Val, very
Okay.
good to see you.
Thank you. Good
Always
to see
good
all
to
of
see
you.
Thanks for sharing that about your family. And
Oh, of
Michelle,
course.
thank you for doing the lead. That's great. It's always a pleasure to see both of you.
Oh, it's a pleasure to spend any time with you, Val. Thank
I'm
you.
so honored.
And same to you, Jason. And is
Okay.
Tim gone? Have we
I
left?
think Tim dropped. Yeah.
Tim
Michelle,
dropped?
very good to
Well,
see you.
Very good to see all of you. Thank
All
you
right.
again.
Take
Bye,
care.
everybody. Thank you.
Bye-bye.